Hello everyone, it's Wednesday, March 25, and today we will review the charts for the euro and the pound to identify potential market trends. The previous trading day was quite volatile for the European currency due to uncertainty surrounding the situation in the Middle East. In early trading, the euro was weighed down by weak PMI data from the Eurozone. Later in the day, inconclusive PMI data from the United States curbed demand for the dollar amid statements from US President Donald Trump, who claimed that Iran had made a major energy-related concession to the US. In contrast, Tehran labeled these talks as fake news intended to manipulate financial and oil markets. At the same time, Iranian authorities stated that foreign vessels are permitted to pass through the Strait of Hormuz, provided they do not support acts of aggression against Iran and comply with the country's established rules. This statement put some downward pressure on oil prices. However, their upward trend remained intact, as the majority of transit is still blocked and under Iranian control. Additionally, reports have emerged that the US and Iran have resumed indirect talks through intermediaries. While there are no full-fledged negotiations between the two countries, sources indicate that both a ceasefire and a broad agreement to end the 25-day conflict are under consideration. Meanwhile, media reports also suggest that the US intends to deploy a brigade combat team of around 3,000 soldiers from the elite 82nd Airborne Division to the Middle East. This contradicts Trump's claims that Tehran and Washington are negotiating a deal. In light of these developments, it is no surprise that the foreign exchange and stock markets are experiencing sharp price fluctuations. Looking ahead, we can expect this elevated volatility to persist. Now let's take a look at today's macroeconomic calendar, which includes inflation data from the UK. The Consumer Price Index for February is estimated to have risen by 0.4% after 0.5% decline in January, reflecting ongoing high energy prices. Core inflation, which excludes volatile food and energy prices, is expected to come in at 3.1%, a positive indicator for the British economy. ECB President Christine Lagarde is set to speak today, and Germany will release several reports, including readings on business climate, current conditions, and economic expectations. Weak data from the euro area could put pressure on the euro. In terms of US statistics, the reports scheduled for today are relatively minor, including current account and import prices data, which are unlikely to significantly impact market sentiment. Traders will likely continue to focus on foreign affairs and developments in the Middle East. Turning to technical analysis, the 1-hour EUR USD chart indicates that the pair is currently trading within a wide sideways range. A false breakout at 1.1584 could generate a buy signal, pushing the euro up to 16.28. A break in consolidation above this level would lead to a rise to 16.67 and potentially open the path towards 17.05. At this level, I would recommend going short on the rebound, targeting a 30-35 pip move. Short entries at 1.1667 and 16.28 should only be considered in the event of a false breakout. This would represent the lost opportunity for bears to regain control of the market, with a target of 15.84. A break below this mark would drag the euro down to 15.49 with the potential to reach 15.19. At this level, it would be wise to look for long positions on a rebound, aiming for an intraday correction of 25-30 pips. Long entries at 15.49 and 15.84 would be valid in the case of a false breakout. Speaking of the British pound, bulls are likely to step in around 33.82, targeting a rise to 34.13. And breaking consolidation above this level would set the stage for further gains toward 1.3441. The most distant target would be 34.76, where it would be prudent to consider short positions on rebound, aiming for a 30-35 pip move. Short entries at 34.13 and 34.41 would be appropriate following a false breakout. If actual inflation data significantly differs from analyst forecast, the pound sterling may decline. Rise in inflation could prompt interest rate hikes, potentially supporting the national currency. However, high inflation may also hinder economic growth, which is already fragile. Thus, if the price breaks and holds below 33.82, sterling could slide to 33.53, where long entries should only be considered following a false breakout. In the event of a deeper drop to 33.25, I would recommend taking long positions on a rebound, targeting a 25-30 pip move. Best of luck to everyone!